Welcome to Nasdaq Talks. We're joined today by Nordea's lead equity strategist, Michael Borre. And we're zooming in on US stocks now. So what's your view on the US stock markets in 2016 going forward?
We actually find it quite attractive, and we expect them to outperform for the rest of 2016. We recently upgraded our recommendation on the US market to overweight. And we think there's some good profit growth drivers that's going to come into play this year. And some of the reasons are that we think the economic growth in the US is on a much firmer footing than in Europe. We also think there's some important base effects from the oil price, which has stopped going down and it's actually increased from the bottom. This effect alone means that we can look forward to increased industrial production in the second half of this year. And we think that's going to lead into increased profits also in the American companies.
So what is it, in your view, that Nordic retail investors should look for in the US market?
We think there's a lot of extra opportunities in US to create the return for your portfolio. There's a lot of stock types in US that you just don't have access to in the Nordic region. You got to remember that the Nordic stock market only represents 2.7% of the global stock markets. And just find it would be a weird coincidence if all the best stocks in the world were located just in those 2.7% of the market. You got to look to US and have some US stocks in your portfolio if you want to maximize your opportunities.
That's a good point. So specifically talking about the US and growth markets, what is it about the US business landscapes that sets it apart from Europe?
There's an interesting aspect about US and its ability to create growth companies, and one of them is just the size of the economy. Especially in the retail space, if you have a successful retail business you just started up, you can take that business and start opening more stores in the state where you have started, but you can also expand to the state next door, thus creating growth. And you can do that 50 times in US before you run out of growth opportunities. And that means that the growth opportunities for a retail business in US are usually much, much bigger than they are in Europe, where we have different countries. There's bigger cultural barriers, bigger legal barriers. So it's much easier to create a really big growth company in US and have many, many years of growth ahead of you. And good examples are Walmart, for example, the world's largest supermarket chain. McDonald's started in this way. Home Depot, that's the biggest do-it-yourself chain in the world today. These are all examples of growth companies who have started in one state and then just grown and grown by copying a successful concept in one state to yet another state and another state.
So besides stock markets and business landscape, if you're a Nordic retail investor, what sectors are you finding interesting at the moment?
There's many different sectors, but one sector I would look at in particular right now is the IT sector, which is also a sector where we recommend to overweight in your portfolio. And if we're talking IT, I think it's natural to look at US. Many of the leading IT firms in the world are located in the US market. And if we're talking internet, you practically have to go to US if you want exposure to that space. Think about Google, Facebook, Twitter, LinkedIn. These are all US names. So if you want exposure to the rapid development and growth on the internet, you got to go to US and invest in some of the big leading names over there.
Thank you for those insights, Michael Borre.
You're welcome.